Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing questions to ask yourself before buying a rental property. Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com. Many investors like the idea of actively purchasing rental properties. They think they will purchase one rental property, it'll make $500 a month passively, then they will refinance it, buy another rental property, and before you know it, they are making $10,000 per month and they can leave their job and travel the world. Sounds great. Sounds like something you would hear from some real estate guru on social media who coincidentally is selling a course on just doing that. But there's a lot that goes into purchasing a good rental property. There's even more that goes into managing that rental property. What you won't hear on social media is how difficult it is and how risky it is to directly purchase rental properties. Any investors seriously considering active real estate investments should ask themselves 4 questions. First is about experience. So a dead giveaway of a newbie investor is when they're explaining a real estate investment and they say something along the lines of rent is $2,000 and the mortgage is $1,500 and their monthly passive income is $500. Well, nothing could be further from the truth. There are multiple parts to purchasing a rental property. If you're self-managing or hire a manager, you need to choose the market, the submarket, the neighborhood, build the team, identify the property, usually underwriting 100 properties before buying one. Inspect the property, put an offer in on the property, have it accepted, finance it, purchase it, then do the renovations. Then property management starts, including dealing with tenants, all before making $1. An operating partner of ours has 2 data scientists on payroll, and all they do is review real estate markets throughout the United States. Population, job growth, crime, migration, among dozens of other factors. This is how important it is to choose the right markets when investing in real estate. The experience and expertise you utilize to generate your investment funds most likely will not carry over to real estate investment, no matter how successful you were in your W-2 or other business venture. Second is money. It is common for new investors to underestimate the funds required to purchase, renovate, and reposition rental real estate. Experienced investors have sizable reserves that are available for the inevitable cost overrun or unforeseen repair that always happens. Most new investors only calculate the down payment and the closing costs, but nothing more. They say they will pay for renovations from the cash flow, which is a huge beginner mistake. If properties are not maintained, tenants will leave and or not pay rent, and issues need to be addressed immediately. The second part of this is the lack of diversification. If you have 2 small duplex rental properties that you invested $100,000 in each, you're betting all of your real estate investment funds on these 4 units. If there's an issue, there are no other real estate income streams to cover. That $200,000 could be invested into 4 passive syndications that now gives you diversification of over hundreds of units in possibly multiple markets. Third is the team. It takes a long time to find and build a really good team in real estate. And you've heard some of my previous episodes about that. And a real estate team consists of an attorney, an agent, a mortgage broker, a property manager, a handyman, and contractors. If your team is weak in one of these areas, it will require more of your time and it will lower your overall net operating income. Property managers are not a one-size-fits-all position. Managers thrive with properties and markets that they are comfortable with. And they manage outside of that box, that's when they will fail and that's when you will fail. Finding a good property manager takes time and you need to be sure they are good or you'll be spending hundreds of hours finding, interviewing, and integrating a new manager down the road. The property manager is the most important part of your real estate business and they will make or break your real estate portfolio. Fourth is time. No matter how good your team is, you will be required to oversee operations. This is called asset management. We are consistently speaking with our property managers, usually once per week and even more frequently during the initial 12 to 24 months of ownership of a property. When we are buying 100 plus unit complexes, it is much less time consuming per unit when compared to small multifamily properties. Ask any landlord that directly owns rental property and has a manager, and ask them how much time they actually spend overseeing operations, and then factor those hours into your monthly budget to see what your actual return is once you pay yourself for the hours you are actually spending. You might not be making as much as you think. If you're a successful professional or entrepreneur and you're considering direct investment into rental real estate, consider passive investing as an alternative that will help you generate true passive income. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. Look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.